Okay. So today I'm gonna go over order flow of the market. That's how we do it. Pretend I wake up. What am I looking at? My day chart first. My bias for the week was sell side bearish until it hits the weekly sell side. So it did hit the weekly sell side and volume imbalance, and then it closed above these relatively equal highs. So I was bullish, bearish for the day, but I had to obviously fix or change it because it started going for these highs. So 15 minutes. Quickly gonna write. On my outside, I did have these relatively equal highs as my target. Relatively equal highs were my target. I did have these, this being my primary buy side from the last week high if it went up to the north, and then a consequent encroachment of the weekly wick. My sell side, primary sell side, that I was actually aiming for was right here, this low, and these lows right here, because they kind of had like multiple like lows right here. So I mean, I guess to be honest, the best way to put it is like these lows. So I had multiple lows down here, close lows. And so the market opens up, takes initial buy side right here, initial buy side taken, sell side, initial sell side, sell side taken, creates new, buy side taken, goes back down. Finally takes the sell side completely at 9 a.m. It creates doesn't take sell side from this wick, which is actually something I was looking at, but I was like, okay, that's my sell side. That's what I'm gonna aim for if it switches up. So it does basically break this 15-minute high on open. So I'm thinking it's gonna go down because it has this volume imbalance and this volume imbalance, or fair value gap right here, sorry. So I'm thinking, okay, it could go lower, fill this volume imbalance, but what it does is just opens, small wick, kind of consolidates, drops low to this right here, and then it reverses up, it goes up, or it breaks through displacement, creates this volume imbalance or fair value gap. I don't know why I marked this. Probably fair value gap in the lower time frame, and then another one does drop down, immediate rebalance, shoots back up. On Tuesday, it does break these relatively equal highs from these stay, so it hits my target, reverses, starts filling in this whole entire 15-minute fair value gap. After it hits this target, reverses, could turtle soup that, external to internal liquidity. So it hits this external liquidity, the buy side liquidity, and then it comes in to fill this 50%, I believe. From where price opened up, this whole entire leg. I would say honestly, right here, because this is an order block. 50%. Boom. Because this is a wick, grade it. Hits 50%, leaves the bottom portion untouched, shoots up. On a run, leaves the fair value gap. So let me mark these 15-minute fair value gaps that it fills up. And then kind of breaks up over this high, leaves this weekly primary by last week's high open, so buy side tomorrow. I'm gonna be bullish tomorrow, and consequent encroachment of the wick. I'm gonna be bullish tomorrow, but if price starts to break down below this swing high of the 15-minute, to be honest, if it breaks below it, shows retracement, then comes back down. That's kind of the goal. But let's go into the 1 minute quickly. Since I'm running out of time, I'm supposed to be somewhere. Okay. So, like I mentioned, opens up, takes primary, buy side, makes primary, takes primary sell side. Right here after going into it, volume imbalance, into the volume imbalance, into the sell side, takes buy side again, only fills up this volume imbalance, bodies respect the volume imbalance. Wicks do the go all the way down to this low. The stop loss right here if you want to go up, play the sell side, buy right here, 85. Only a 10 tick move. If I want to play that small, takes this turtle soup, creates wick, doesn't show that it wants to displace higher, drops lower. Doesn't really leave you any entrances on the fair value gap. You can use no entrances. Drops lower. Now this is what I mean. This is how I want to see price. Breaks through, no long wicks. Does it with displacement, or does it with power. Breaks over this swing low, breaks this swing high, breaks this swing low. So it gets the buy side, goes lower, takes sell side, and then before it takes the rest of the sell side, it comes up and it takes the rest. Keeps on going lower up until this right here, sell side. And then it switches to a buy program in the morning. I noticed that. Should have not traded in this market. Took a trade right here. First presented fair value gap. Right here. I was bearish. And then this is like, it takes buy side a couple times. But it respected the fair value gap enough to where, like, if you take this, it respected the fair value gap enough to where right here, where it didn't displace higher. So I'm okay. You know what? I'm okay missing this move in the morning because it was kind of choppy for me. A time of day though, 9:50. Price started moving. Boom, boom, and then sells up. Boom, high. Use a fair value gap, breakaway gap, fair value gap. Vacuum block right there. Vacuum. A move like this lets you know price is going to be going high. Comes down, shoots back up, leaves this fair value gap. Boom. Takes my target. Takes this high right here. And then goes down. Forces its way up. 10 o'clock. Remember this, 10 o'clock. Fair value gap. ICT silver bullet. How long did it take? 10 o'clock makes it. Trades into it at 10:05. It's there until 10:27. Shoots up. Now this is the 15-minute fair value gap that I was telling about that it made. I wouldn't have known it was a fair value gap, but it does create this right here. Boom. See how price trades back into it. Trades into it. External liquidity into internal. Once it takes the high, notice how when the price doesn't move up past it, it rejects pretty quickly downwards. If price wanted a break above, it would do it relatively quickly like it does right here. Boom. And this is what I want to wait for. It to break these relatively equal highs. Boom. Should have known that. Comes back down, trades into it. Drake drops lower. Sell side. Minor buy side comes out. Shoots up. Time again. It's 2 p.m. 15-minute fair value gap. 2 p.m. Trades into this 1 minute. Use this 1 minute fair value gap that it could be traded into. Liquidity target up here. See how it kind of stops every time? Very short if it doesn't want to go higher. Like a turtle soup, external into internal. If it does something like this. Come back in. Boom. Then when it starts to hit this, goes up. Fair value gap breaks through these. I want to enter in right here. Boom. Sees relatively equal highs. Closes above. That's what I want to see. I want to see if it goes higher. I want to see it close above the targets. Does it close above the targets? It does. Once it closes above, then it's going to want to keep on going higher, which it does. Boom. Hits my target, closes above, but not with a lot of candle movement. Does it close, like say for example, up here? Closes above, not with a lot of candle movement. Boom. Closes above, but not with a lot of candle movement. When I want to, if it goes lower, I want to see it go lower. Multiple candles closing. My target's being higher. Closes above. Keeps on wanting to close above this. Leaves this fair value gap. Liquidity is up here still. I believe I have my new week opening gap right here. Below. Goes up. Keeps on going up. Finally shoots all the way up. Come back down. Up again. Liquidity. Doesn't. What's it do? Close above. Target would have been up here. It doesn't. So it reverses down. Breaks this swing high. Does it close above the swing high? No. Goes low. Stays low.